Okay, I think we're on. Great, welcome everyone. Bang on 12 o'clock. Very good to be here. Very good to see you all. And Jenny, lovely to have you with us.
Thank you, John.
So this is the first webinar we're doing in the series for houses, mortgages, investments and risk. 10 guesses to pick the theme. It is, of course, all about mortgages, houses. It's obviously very topical at the moment with the way the property market is going. And there are a whole lot of subsidiary services that go around the property market. So the idea with this webinar is that over the coming months, we're going to be interviewing other professionals, maybe a real estate agent, a lawyer, some property management people, just to, I guess, give a broader view on the property market and how that can affect or help your mortgage and your risk decisions. Okay, so today, though, it is our first one, so we're going to interview each other. So that's going to be fun. So we do have some prescribed questions, and I think we'll just crack on, shall we?
Just roll in.
Just roll in? Okay. What I will just say in terms of setting expectations, we fully appreciate that people don't have a huge amount of spare time in this busy life that we find ourselves. So it's very much about trying to keep this pretty short. So we're aiming for about that 30-minute mark. And so today will be the test. Can we do that? Okay. Jenny, tell us a quick little bit about how you got into this role.
How I got into mortgages. It's probably like most people when you ask them, how did they end up doing their job? And they say they fell into it. So I'm a bit like that. I started working in a bank, like lots of people who don't quite know what they want to do. And I've done a variety of things, including running my own business. And in 2013, I was looking for, at the beginning of 2013, looking for something new to do, and I ended up back in mortgages. So I've gone through a few employment roles in that, and I've been working for myself for the last 5 years. So, yeah, it's kind of full circle.
Excellent. And so what are a few typical questions that you get asked on a daily basis?
It varies. So I guess it's dependent on who's asking. Probably the main thing, how much can I borrow? Other questions like, if I want to buy another property, can I keep the one I've currently got? And probably for the newbies, first time in the market, how do I do it? What do I do? They're usually quite stressed on that space. So it's just breaking it down for them on the process of getting a loan, buying a property, structuring it, and looking after them after that.
Very good. So this might come up a bit later on, but it's just popped into my head, so I'm going to ask it. Kiwisavers, so people who are able to use part of their Kiwisaver or some of their Kiwisaver for the first time.
Yeah.
Do you want to talk about that a little bit?
Okay, so Kiwisaver is, you can use that for your first home. So the government requires that you leave $1,000 in your Kiwisaver. You can use the rest of it. You need to be in Kiwisaver for 3 years before you can pull that out. Some people think it might be dependent on income or what they're buying, but it's your money. So you can use it regardless of your income, regardless of the cost of the property that you're purchasing, as long as you've been in Kiwisaver for the 3 years and you have been contributing. So some people get a little bit caught out, self-employed people, someone might have stopped work if they've had a child. You need to talk to your Kiwisaver provider. And I would suggest that's probably one of the first places to start if you're wanting to buy a place and use that money, is to first ascertain that you're able to withdraw your Kiwisaver. That's a really good start. If you can use your Kiwisaver, you may be eligible also to use First Home Grant. There's stricter criteria on that. It's related to income and the region that you're buying. So if you can get Kiwisaver, you may be able to use First Home Grant as well.
Right, so just to, I guess, to clarify that a bit, so Kiwisaver itself is not dependent on your income?
No.
But the First Home Grant,
correct,
maybe.
And also the price of the property that you buy. But Kiwisaver, you've been in there 3 years, you should be able to use it.
Great.
Also too, if you've owned a property before, you need to get permission. It's a second chance to be a first-home buyer. You only ever can use your Kiwisaver once. You don't get a second chance to use your Kiwisaver. But if you didn't use your Kiwisaver first time round and you're buying your first home, if you apply to have that second chance granted, you can use your Kiwisaver.
Oh, okay. So again, I'm just going to go off script. I had a client, in fact, Catherine had a client recently where he was in a relationship and they that ended within about 6 months. And so his ownership of that house was only about 6 months, but he's now looking to have use his Kiwisaver to buy home now.
Right.
So would that...
in that second chance criteria, you need to have assets that are less, I think the figure is $200,000. So generally most first-time buyers don't have that much, and it doesn't count your Kiwisaver money. So yes, I haven't encountered a client being turned down for that, because I mean the goal is to get people into their homes. So if it can be done, it will be done.
Great, good to know. Awesome. Okay, I'll get back on script now.
Okay.
Here we go. Okay. What does a typical client look like for you?
Typical client. I would suggest that the market changes, so that typical client changes as well. At the moment, there's a lot of first-home buyers. The interest rates are so low. Sometimes it's cheaper to be able to buy your own home and pay a mortgage than it would be to rent. So that would be a large proportion of the market. The other people would be the ones looking for more space, the upsizing, selling what they've got, buying a bigger property. And there's probably a lot of iterations in between, but if I've encountered most scenarios, so I'm always looking for something new.
Very good.
Yeah.
So this has come up here. Can brokers offer extra insight around specific banks' attitudes to loans? Will one bank accept a loan that another bank has declined, even if the details of the loan purchase are the same? Good question.
That's a great question. Yes, there's a huge variety amongst banks. They all have different criteria. Sometimes the details of an application could be exactly the same. They declined at Bank A and accepted at Bank B. There's also different criteria. So if I was a first-time buyer, I had 15% deposit and I wanted to buy an apartment, if BNZ was my bank, they would say, no, we won't do it. But Westpac would do it. So in dealing with a broker, you get those different nuances. Probably the same as insurance companies, different criteria.
Yeah.
So yes. And also too, banks have different appetites for business. It's like any business. Sometimes they have a lot of money they want to lend and they're keen to get it out the door. Other times, if it's not much or they've used up how much they want to lend for that month, they'll be cherry picking the right clients that they want.
On a monthly basis?
Yeah.
Wow.
Yeah, especially if it's the high equity lending. There's only a specific amount of money they're allowed to lend each month. So you might ask for it on a 30th and it's a no, and by the 2nd of the next month, you're in.
Wow.
So, yeah, changes.
And most Joe public wouldn't know that kind of thing.
No.
Okay.
Yeah.
Value of having a broker. There we are. Excellent. Okay. Is there a particular market or sector or region that you work in?
Physicality, I am on the North Shore of Auckland. I have a number of clients in that space, but I do have a North Canterbury sheep farmer, and I have somebody in the entertainment business in Dunedin. I don't know how big that can be. So in terms of location, a variety of areas. In terms of type of client, I probably have half my clients are self-employed in some type of business, and other half on PAYE. So yeah.
Okay. Very good. I think you might have answered this. On balance, do you see more first-home buyers, investors, or people on their second or third homes?
Again, that varies with the market. So at the moment, this current year, the Reserve Bank has relaxed the requirements on LVR. So this time last year, if you wanted to buy an investment property, you needed a 30% deposit, be that cash, or most people it's equity, whereas at the moment you only need 20%. That makes a huge difference if as to whether you can buy a property or not. And I'll just cover one thing that people ask and they don't quite understand. How does it work if you want to buy an investment property but you have equity? People are not quite sure how that works. So I think in simple terms, the person selling a property, if they're selling it for $1 million, they need to receive $1 million. So you as the buyer of an investment property, you might have enough equity. At the moment, you'd need to have $200,000 equity in your current property. And so the bank would secure 200,000 against the place you own and 800 against the property that you're buying. And if the LVR changes, that means it's a $300,000 equity that you need. So you can see how those LVRs make a big difference. Yeah.
Is that number likely to change at all? Will it come down?
It will. It is likely to change. The Reserve Bank, early next year, they only relax the rules for 12 months. And they actually relax the rules for the banks more than the public. And it's that relaxation that's translated on into what the banks will offer the public.
Right.
But the market has gone, I can cover that a bit later, but the market has gone off lately. And so it's a tool, I call it a macro tool to slow down the market. So yes, it is likely to change.
And that LVR is going to go up.
Yeah. So you'd need to have more equity or money to buy an investment property, which is why we're in the space that we're in. It's gone crazy.
The good times are rolling. Okay. We'll probably cover this. What have you noticed about the market that we're in right now?
It's really hot. And if people say, what do you need to buy a property? Do you know what? The main thing you need is tenacity. So I sometimes have clients saying, oh, I'm just casually looking, or we'll just go and see what happens. You're not going to get there. I have clients saying, oh, I'm not paying that much. And they don't, but they don't get the house either. So it's a hot market. You need to be prepared. You need to, do you know what? You almost need to have a few losses to understand, because you can hear all the people in the world saying, oh, that's going to be going for a high price. And people think, oh, I don't know if I necessarily agree with that, but they'll find out that it does. But it won't last forever, but that's the space we're in now.
Okay. What are some of the traps or obstacles that you see people come up against?
Not being prepared. You need to get your pre-approval in place. It's been so busy that it takes a really long time. For the first time in nearly 8 years, I've seen banks say, I'm sorry, we can't meet that deadline. We can't approve before you go to auction. So that's unusual. If you have your pre-approval in place, so you know that you've got your borrowing, the bank still has to accept the property as a security. But that doesn't take particularly long. So that's probably the biggest, it's the rush about getting the money. It's also a real challenge to a buyer. If you don't know if you're going to have the funds to go to auction, do you get your building inspection done? Do you pay for a limb? Do you take time off work to turn up to the auction? To get your head around, there's not many people comfortable with that time frame. So that is quite stressful. The other one is realistic about price. You would be well served to go to a few auctions if you're in this current market at this time. Look at some properties, look up on the council website, what is the government valuation? It's probably supplied to you by the real estate information, and see what it goes for and start to get a sense. If the CV is 800 and it's selling at 900, you get the sense of where something might sit. Plenty of people start off with this idea that it's not worth that. Property is always worth what someone's willing to pay. So
it is, yeah.
It takes a while to get your head around it sometimes.
Very good.
You might not want to hear. Equally, the difference between the borrowing, if you look on a mortgage calculator, it's scarily not that much more to borrow an extra $50,000.
Right.
She said casually.
Just borrow an extra 50. That's fine.
If you can.
If you can. Okay. What are some tips for people listening to make things easier?
To make things easier for buying?
For mortgages, for buying.
Okay, mortgages. If you want to take a step back to get a loan from a bank, I think you need to think about, if someone's looking at your bank statements, how do they look? So you might be a person who uses FPOS a lot for takeaways, or like what I mean by that is little spends. So maybe have your bank statements, just think about it. Maybe when you go and do your groceries, you'll take out an extra $100 and pay cash for those little things. Just keep your bank statements straightforward and consistent, so that a lender can look in and think, yep, I can see the pay going in, I can see the groceries going out, I can see the power bill, it makes sense. That makes it a much more straightforward process in terms of getting something assessed. In this current climate, if you're a self-employed person It's not impossible. Don't let anyone tell you that's the case, but it's difficult. So it does depend on your industry. If you're obviously a travel agent, it's not going to be ideal. But if you can have an accountant that can prepare you year-to-date financials, a forecast, and justify why that forecast is of value because you have X number of contracts or this work coming up, etc., that'll hold you in really good stead. So it's always getting your money sorted up front, get your pre-approval, do your research on your properties, look at the popular suburbs, and then look at the suburbs next to the popular suburbs. And maybe it's going to be a case of the suburbs next to there. If you're buying an investment property, where are your tenants going to work? How are they getting to work? Is there transport? Where do their kids go to school? Is it safe if you let them have a cat, for example? But, just put yourself in that space to think, is that somewhere I'd like to live? And you'll be in a better space. It can get very complicated, especially investment properties, but it just comes down to the basics, pretty much, I think. Just dial it back. Would you live there? And how would you fund your rent?
That's great advice. Very good. Okay. And just lastly, so what do you bring to the table in a crowded market space? What do you bring?
What do I bring? So I probably myself, like other brokers, we know where the banks are at. So we deal with the banks on a daily basis. So for example, literally today, ANZ has sent through an update on how they justify border income. So something like that, you're dealing with a broker, you're going to have up-to-date information and you're not restricted to one lender. I guess for me, what do I bring? I love what I do. I like helping people. I try not to tell people what to do, but I can be directive, which is helpful if you're overwhelmed with understanding the space that you're in. I care about the outcomes. I just recently went away for the weekend and, coming home, there's nothing like coming home. And to be able to pass it on to somebody else that they have their own home that they can come home to, it's a great feeling. So hopefully that's something that I can journey with my clients. And I do have some that I've been with for the last 8 years and they're friends. So it's great.
Fantastic. Well done. Very good.
Okay.
Hey, that's good. Okay.
Should we turn the tables?
Yeah, turn the tables.
Right. Okay. So, Dom, how have you ended up in the risk space?
I did fall into it. Yes. Go back to your comments right from the start. Yes, I really didn't think I was going to get back into insurance. This is my third stint. So perhaps there's a message there somewhere. So I started as a mortgage broker in Australia in 2001, actually with my wife. We did that for a little while and other things happened. And when we first got to New Zealand, I worked with Southern Cross Healthcare and I was with them for a few years as well. So I understand the health insurance very well. And I've got to admit, when I left that, I thought I was done with insurance, financial services.
It's like me being in the bank when I left school. You think you can get away.
I keep putting you back in. Yeah, but as it turned out, no, here we are. So I've come to really love, probably very similar to you, just being able to help people and work through the challenges that people have and come out with a really good solution at the end. It's very, very rewarding. Yeah.
So what are the questions that you keep encountering from people?
Yeah, look, price. How much is it going to cost? It always comes down to that. But also, how much insurance do I need? So there is no stock standard answer. I've seen a few benchmarks or ideas out there from people that you need 10 times your income for life and disability. I understand those kind of numbers, but every family, every situation is different.
I think the main thing is you need insurance, and that's a detail that you figure out as to how much, isn't it? Yeah.
Right. And that's the big one. So one of the things I come up against, I heard this recently, someone said, I don't believe in insurance, or I don't need insurance. And again, I can appreciate that it can seem big, hairy, and complicated, and all the rest of it. But that again is why I use a broker. We try and make things as simple as possible. And you're right, people need insurance. You can roll the dice And you might get lucky, and I do come across people who get to 70, 75 and they're perfectly fine and nothing's happened, but they're very rare.
The odds on something happens in people's lives, doesn't it?
Yeah.
It's just how it seems to be.
Yes.
And, it's probably one of the few things you pay for that you just hope you never use.
Yeah, absolutely. Absolutely.
So tell me about your typical clients.
Yeah, so look, we've started this business early June. So for us, our client base is still quite small. So we've got about 30, 35 clients at the moment. Typically, they're 30s, early 40s, young families. That said, we do have clients either extreme. So we've got a young 20-year-old at one end and a 57-year-old at the other end. So,
oh my gosh, 57.
Yeah, so it's, I guess, we'll talk to anyone.
Yeah.
But right now, our main base, I guess, is those 30s, early 40s.
Right. Yeah. And market sector and region, is there a particular, I guess you've covered that?
Yeah, look, I probably get some odd comments about this. COVID was a blessing for us. From the point of view, I'm going to back it up. So from the point of view, people got used to Zoom.
Yes, you're right.
So as I was starting thinking about this business, I thought I was going to have an Auckland-based business because typically people want to see us face-to-face. However, with Zoom, people are now much more comfortable about watching. You guys are watching us right now. So this idea of screen time, face-to-face, doing business is suddenly much more acceptable. So we can now have national clients. In fact, we've got a client, that 20-year-old, she's in Wellington, other clients in Christchurch and other places. So,
yeah.
From a geographic point of view, nationwide.
That's great. Do you see the market, like I see shifts in the market of different types of buyers depending on what's happening? Is there any factors that you find you get different clients? I mean, I guess COVID, you might have got an increase in life insurance or medical, but do you find other factors influence clients?
Well, it's, yes and no. I'll give you a little politician's answer. Sorry. So, look, what we know about recessions is that people look at their spend far more seriously. We also know that with something like COVID, people understand their vulnerability. Humans are fragile beasts. Risks will happen. Stuff happens that we can't foresee or plan for. And in this kind of environment, people are much more willing to listen and say, actually, there are risks out here that I need to think about.
Yes, It all looked a bit plain sailing, didn't it?
Yeah,
2019.
That's right. Nothing's going to happen to me. She'll be all right, mate, and all that. But no, actually, this has been a wake-up call. And so people we talk to, they are very much thinking about, well, I know what happens if I'm not able to work and my income suffers because of something like COVID, but what if I do have a heart attack and I'm not able to work for 6 months or whatever?
Yeah. So what traps or obstacles do you see your clients come up against?
First one is probably around pre-existing conditions.
I always think that people think that they can go on forever and you just don't know when something happens and all of a sudden you've lost that opportunity to have it covered.
That's right. That's right. Look, a big reason why I like talking to younger people or people who don't have insurance is because there are some very simple things we can put in place. That's what we've done for the woman in Wellington. Put in some long-term insurance that really doesn't cost a lot, but she's got that cover until she's 65 across life and total permanent disability. Yeah. So we can do that. However, as we get older, the chances are more things go wrong. Now, with pre-existing conditions as well, I quite often hear people say, I've got pre-existing conditions, so the insurance company is not going to touch me. That's not actually accurate. With insurance, there's really 4 things that are going to happen. One, you're going to get insurance as quoted on the standard terms. The second is that you won't get any insurance. Your pre-existing condition is too severe. And then the other 2 options is your price might be increased because of the condition that you have. So the insurance company is offsetting their risk by charging you more. Or they just exclude that one particular concern and they'll cover everything else.
Yeah.
There's only 4 things that can happen. So if you have a pre-existing condition, don't just think, I'm never going to get covered, because you might. And part of the reason that you talk to a broker is just to figure out who can help.
Right.
And going back to your point before about different banks have different options.
Yes, yeah.
different insurance companies, they view the same condition differently. They view it as a different type of risk.
So
just because one insurer says no, one or two others might say yes.
Yeah. Oh, good.
Yeah.
Good.
Yeah.
So, what are some tips people listening can do to make it easier to get insurance? Is there anything you can do? I guess you start early.
Yeah, start early. Talk to a broker. Look, part of the thing, I'm just going to jump back a bit. So our industry, we were talking about this before, it's going through a massive regulatory change. And a big driver from FMA, the Financial Markets Authority, is that people who buy financial products have a better understanding of what it is that they're buying. Whether that happens in reality or not is neither here nor there. But back to your question, what can people do? I think people need to just get some information, be informed. You don't have to read 17 books, this thick to understand what you can't. Yeah. Sorry, my hands bring that way. You don't need to read a book that thick to have a full understanding, but read some articles, get some idea of what's going on, listen to some podcasts, have an idea of what some different terms, financial terms mean.
Yeah.
And the same for insurance. So understand the difference between life insurance or total permanent disability.
Yeah.
And again, you don't need to know the detail, but just enough so that when you are sitting with your broker, you have some base level understanding. That means that the conversations you have are far more deeper, far more meaningful.
Yeah. A mistake that I see is often single people, and they say, "Oh, I've got life insurance." And it's like, that's great. Who's that for? And yet they have got nothing if something happens to them and they can't work.
Yes.
Yeah. And to me, that's a bigger risk, and they haven't thought about it.
Yeah. That thing about living insurance, if we say in industry, what's your biggest asset? Your biggest asset is your ability to earn. Yeah. Especially if you've got a family who are dependent on your income. Most families that we see, both parents are working. So if you lose one of those incomes, it's going to have a massive effect on the family.
Yeah.
So yes, being able to protect that, cover that risk. Look, I would say, a quick guesstimate, maybe 50% of the people I see wouldn't survive more than 3 or 4 weeks if one or two of those people lost their income. That's a big number.
It is.
And yet, what are these people doing to protect themselves? So we can help. There are really expensive ways of going about it, and I see a lot of people who are overinsured. And then there are actually, how do we meet your circumstance with your budget?
Yeah. Good. And so, in the same question, in the crowded market space that we're in, what do you, Dom, bring to the table?
Look, I think a big part of how we've structured the business is to give information first. So you can jump online, you can read some blogs, some articles, you can listen to some podcasts. We try and do them in bite-sized chunks so that at least you get an idea, you get a flavour of what it is that might be relevant for you in your situation. The other thing, of course, by doing all that is you get a chance to see us, or see me, at least my face, you get to hear my voice. And you get a chance to say, okay, based on what I see from this guy, do I want to do business with him?
Yeah.
So we try very hard to not jump down people's throats and just take a softly approach and to meet people with where they're at.
Yes, good. And probably demystify the...
Yeah, absolutely.
Yeah, that's the hard one, isn't it?
Insurance doesn't have to be hard.
No.
It doesn't have to be hard.
Really good.
Here we are. So I think we've wrapped that up now. I think what's time? On the half hour, so that's not bad going. There we go.
See, we promised and we delivered.
Yeah, that's good. I like it. So we've had a question come through. We've answered that one. By all means, get into contact with our Facebook pages, Bolster Risk Management for me, and
Jenny Aitken Mortgages.
There we go. Leave some comments, ask some questions. There are plenty of ways to get hold of us, and we will be back next month. And as I said, the plan will be to be with another professional in the area of mortgages, houses, investments, and risk. So please tune in for next time. Awesome. Good to see you.
Thanks, everyone.
Okay. Now, how do we turn it off?